This is Jeff Grebe, and this is my Thursday Thought. So as of this week, the average 30-year fixed rate is just over 5%, according to bankrate.com. So as we look at mortgage rates rising, the big question people are asking is what's going to happen to home prices and sales? So let's see if we can answer that. But before we do, be sure to like, follow, and subscribe to this page to get each week's Thursday Thoughts. And I would love your comments below. I think this next quote from Freddie Mac will really help. Mortgage rates are likely to continue to move higher throughout the balance of 2022, although the pace of rate increases is likely to moderate. Much of the increase in the rates in early 2022 is in anticipation of what will happen later this year, especially with Federal Reserve interest rate policy. A lot of people think that when rates go up, prices will come down. Well, I want to share with you today the impact of rising rates on home prices when mortgage rates rose by more than a percentage point, going all the way back to October of 1993. So almost 30 years. And it shows that there was an average of about an 8% home price appreciation as mortgage rates are rising by more than a percentage point. So overall, we can see that rising rates have not had a negative impact on home prices. But I want to take this one step further because a lot of people have more questions about what's going to happen with sales. This graph shows that when rates go up by more than 1%, sales were maybe down by 2%, maybe up by 2%, and averaged only a 4% drop. And of course, the outlier is 2005-2006, which was the lead up to the housing crisis, and home prices did drop by 14%. So what we have here is that rising mortgage rates don't have a huge impact on home sales. So why is that? I think one of the big things we have to look at is what is the available inventory. We have to look at the inventory component because today what we're seeing is drastically low inventory. You know, inventory today is lower than it was in January of 2021, and that was historically low then. So very, very low inventory. It's a huge deficit. Home prices are projected to continue rising because there just aren't enough homes for sale. When we look at the months inventory going back to 2003, 2004, which is all the information we had, they had between 4.5 to 5 months of inventory. A very different inventory level than what we have today. I mean, we're talking less than a month. So in summary, home prices are projected to continue rising. Inventory is still very, very low. And that's the driver that's going to propel us forward when we look at what will happen in the market with home price appreciation as well. I can't stress enough that if you're on the sidelines, it's time to get in the game and sell or buy or both. And if we can help you at Weichert Realtors Advantage Plus, give us a call at 865-474-7100 or find us online at AdvantagePlusTN.com. This is Jeff Grebe, and that is my Thursday Thought for this week. Have a great day.